Welcome to another video. I have multiple different penny stocks to discuss, probably at least 5 of these. Make sure you hit that like button. If you are enjoying this content, we do have some very nice plays. You definitely don't want to miss this video. We have a $70 million market cap penny stock that has $30 million cash. Did $700 million in revenue for 2023, have not diluted in a very long time. Insiders continue to load up, so just under $300 million in assets as well. And guys, keep in mind, I did cover this one before because historically it has always ran when it does reach this $1 level. You know, we caught this one for an easy 30% gain, and now it is sitting right back at this level. We have a lot of news to discuss. So historically, this one always does bounce from this level. Will it happen again? So crude oil did jump 4% just recently as the Hamas leader was killed in a strike. So could August be a month where oil heats up? It depends if tensions do heat up with all these wars going on. So I have a profitable oil and gas related company trading at $1. They actually supply burner management and combustion control systems to $300 billion companies such as Chevron. This is a very profitable company with a catalyst coming out as well very soon. So they've been chosen by many businesses, including EQT, Oxy, Chevron, Shell, and much more. Some multi-$100 billion companies also have a $15 million market cap profitable play that is trading at 50 cents that has $60 million in total assets, which is actually 4 times their current market cap. Not only that, they just secured an $18 million leasing deal with Singapore's Ministry of Defense. So this agreement right here is also worth more than their entire $15 million valuation. And first stock we want to talk about is Nuburu Inc., a $2 million market cap company that has a very massive catalyst happening tomorrow. So this one was called just on last video, just a day or two ago at $1.56. As of right now, it is trading at $2.79. So basically another 100% gainer caught on the channel just from last video. This is a tiny $2 million market cap company that has multiple renewed contracts with NASA. They have some very unique and high value blue laser technology, and they also have a very massive patent portfolio. I think they have around 70 plus patents, or just a massive patent portfolio that some people do value at $100 million. Now, an extremely rare situation that is happening with Nuburu. So it actually got delisted from the New York Stock Exchange and is now on the OTC markets listed under BURUD, and tomorrow it will actually be relisted back on the New York Stock Exchange under the ticker BURU, BURU without the D. So this one, you know, a lot of investors are waiting on the sidelines to pounce on this one because a lot of investors will not even touch the OTC markets, and this one is a pink current stock as of right now. Got completely manipulated, beaten down, and delisted, and just had a reverse split. So the new float is sitting around 250,000 shares, or just under 1 million shares. They just did a 1-for-40 reverse split. This one will be extremely volatile and has been very volatile with low volume, and should have even more volume tomorrow. So as this will be on a bigger exchange that actually does attract, you know, a lot of big investors. So this is one to watch very closely tomorrow with that very massive catalyst happening. One big concern is they are losing money each quarter, millions of dollars, and they are running out of cash. So they could see an offering. That is the big negative concern here. Could see an offering very soon. So you would want to get in and out very quickly, you know, because I think this is happening at some point. So it just depends when that does happen. So exactly what I want to talk about is MWG, Multi-Way Holdings Limited. They're actually a construction equipment provider. They basically buy and sell these, as well as rent them out and do services and maintenance, as well as machinery cleaning on these construction vehicles. They have a very big collection of construction vehicles, cranes, roadwork machines, and much more. Actually have revenue and are a profitable business. You can see on this 13G filing that came out just earlier in the year, MWE Investments holds 20.5 million ordinary shares of Multi-Way Holdings. So basically they locked up and own 70% of the entire company, or just around that, leaving the float at 10 million shares. So a $15 million company that just signed just 1 month ago, or 2 months ago, or just a month and a half ago, signed a $18 million leasing deal with Singapore's Ministry of Defense, strengthening its growth prospects. This $18 million deal agreement is already worth their entire market cap, sitting at $15 million. And looking at their financials, you can see they do have a very strong balance sheet, $60 million in total assets with $7 million cash on hand. And looking at their 2023 revenue, did $36 million with just under $2 million in net income. So a profitable business. 2 or 3 months ago, they expanded their fleet with the acquisition of 16 new crawler cranes. So this is, strengthening their equipment and can potentially enhance their revenue. So a very big acquisition of these machines. Going back to this $18 million agreement, this actually is very big. So they're really big. They hope this sets a foundation for future agreements with government entities, potentially opening doors to new opportunities within and outside of Singapore. So this is one that has a lot going on. One big concern, guys, I do a lot of research on these penny stocks looking for an A+ setup. And the reason I don't always buy these ones I cover, I'm looking for some very good setups. Now, this is, a very big concern with MWG. They have been trading at 50 cents. It looks like under $1. They've been trading under $1 for a year now. So how are they still listed? A very big risk of delistment or a potential reverse split. But looking at their financials, they do look pretty clean. Looking at the chart, this one did gain some momentum just recently, hit 30 cents and bounced all the way to 70 cents, went all the way back down to this level, bounced all the way back to just under 80 cents and is now trading at 50 cents right now. We do have a very nice bull flag, especially that is forming on the weekly. If we zoom out right here, see if we zoom out here on the weekly, does have this massive bull flag forming as well as on the daily. So we're actually looking at this one. Very key resistance level is the 62 cent level. Always, has been having some very nice pops up to this level, comes right back down, but you can see came off of this triple bottom right here, or this very nice bottom, actually touched it, several times, a lot of different times, and bounced all the way to 70 cents before, or just under 80 cents. You can see that wick right here. So is gaining some momentum right here, and we could see a very nice run of volume comes in. Like I said, does have those very big concerns. Next up we have to talk about is PRTS. One I did cover just around this level, did have some earnings come out. Revenue was down, last earnings call before they even came out. They did mention that the forecast would be low. So this caused a 15% drop in PRTS. Keep in mind, I did call this one at $1 at this level. Historically always bounces. You can see zoomed out on this weekly. Every time it hits this $1 major support level, does always bounce. At one point it did go from $1 all the way to $23 from this level. Hasn't had no dilution lately. Does have $30 million on cash, a massive balance sheet, and does have, did just under $700 million in revenue for 2023. Now we have to talk about what is going on. So one level, like I said, at this $1 level has to hold here. Doesn't hold, could see a further drop. As of right now, is holding on this major support level just around $1. So this is one, like I said, very critical moment and for this company in terms of the chart right now. So it does need to hold here. Now, one thing I did like, they did have 450,000 downloads with their new app, which was double the amount in the beginning of the year. So that was very positive. But just in the end of June, just a month ago, they launched their first ever campaign, their ad campaign, That's My Speed, to enhance their auto shopping. So this was the first comprehensive brand marketing campaign in the company's 25+ year history. So there's a lot going on to really, a very big plan for growth with this company. So 12 months after launching their app, it already accounted for 80% of the e-commerce purchases. Just 2 days ago on their earnings call, they said they have some major projects in development apart from all of these big catalysts that have been coming out. They do have a tiny $70 million market cap with $35 million in cash and $238 million in total assets, and like I said, have massive revenue numbers, and they are actually trying to increase their margins. That's what they're really focused on. They actually increase a lot of their prices, which actually lowered their sales, but should increase margins. They have a lot of new things going on. Actually just opened their new Las Vegas fulfillment center, which I think has only been in full operations for the last 2 weeks. So they're actually trying to settle everything out and get everything efficient here. But this should really help out on their margins and their productivity and efficiency. Just hired a new CMO, a very high value CMO just recently to help and support their growth plans. So going back to the revenue, it was down to $144 million for the last quarter. They just came out. They did lose $8 million. Now, guys, keep in mind, just in 2023, just to show what this company is capable of, they are in the auto parts market, carparts.com.inc, entering, they are in a $400 billion market. So if they can just capture a small percentage of this, fix their margins, this is one that is still extremely undervalued, just based on their capabilities. You can see in 2023 actually did $176 million in revenue and pretty much broke even. And the quarter after that did $166 million and only lost $2.5 million. So they do have a lot of operation changes, and if these do fix margins, this could, we really have to watch their next few quarters come out and see if these actually improve. But I have a lot going on, like I said, to improve their profitability. So this is one that's still on high watch, does have a massive revenue capability. Like I said, did $700 million or just under that for 2023, are forecasting $600 to $620 million for 2024, I believe. So still a very big revenue producing business in a very aggressively growing market. For this one really quick, as this video is getting way too long already. So PFIE, Profire Energy Inc., trading at $1.67, $80 million market cap, that is growing their revenue very aggressively quarter over quarter. You can see 2022 did $45 million with $3.9 million in net income. And then for 2023 had very nice margins, $58.2 million in revenue with, just under $11 million in net income. Always add 3 zeros to these numbers. Looking at the quarter over quarter growth, last 2 quarters did just around $14 million in revenue. Quarter before this one did $3.2 million in net income. So it looks like record margins that quarter. Looking on their balance sheet, they do have $65 million in total assets with only $7 million in total liabilities. So a very clean, very good balance sheet. And looking at their income statement again, have a very profitable business. And looking on their website, you can see they have been chosen by many businesses, including Chevron, Shell, and much more. So Chevron is a $300 billion customer or client that they have, as well as these other big name clients that are listed here. So this is something to think about as the oil sector could continue to heat up. Now, they do have a very big catalyst coming out on August 8th. They will have earnings and pre-market. So guys, you should never play earnings plays. They are very high risk, but still want to watch, and we'll be looking at their earnings on August 8th. But this one is looking very clean, a very clean balance sheet in a good sector, growing very rapidly with their revenue year over year. So not only is their numbers going up with their sales, their margins are increasing too. So that's very rare, and extremely undervalued based off that alone, sitting at a $78 million market cap. This is a company that manufactures, installs, and services oil field combustion management technology and related products such as fuel train components, secondary air plates, and more. So all of their products and services aid oil and natural gas producers in the safe and efficient transportation, refinement, and production of oil and natural gas. So their primary products are burner management systems. A big catalyst, they did just announce a 2 million share buyback program. So this is one that is on watch right now. PFIE, let me know in the comments what other plays you're watching, what you think about these plays as well, and I will see you on the next video.